Okay, so good morning, guys. We've completed level 1 C1. We are going for level 1 C2. And level 1 C2 is quite easy. We've already done this in our previous classes and have already dealt with it. So we'll go quickly with it. Now, there are three units in this: understanding basics of accounting system in India linked to borrower type, understanding the operating cycle. And there are 5 plus 3, 8 plus 2, 10, 10 chapters. Right, so we'll quickly go through this. Let's go through basic concept of accounting. So, basic concept of accounting, there are 6 topics. First topic definitely talks about what is to be expected out of this chapter, this lesson. So by end of this lesson, you will be able to explain the basic concept of accounting. Most of you are already aware of it. Outline the concept of the double entry system of bookkeeping, journal entries, ledger, trial balance, final accounts. I don't think I need to explain this. We've been doing it for quite long now. You've already gone through basics of accounting course, and this shows the basic balance sheet equation that assets is equal to liabilities plus equity. So I think this is quite clear, right? Now this is a process. There's a process of double entry bookkeeping system, from journal entries to making ledgers, then to going for trial balance, from ledgers, then final accounts. Final accounts consists of the income statement, the balance sheet, and the cash flow statement. Right, so also you can say like it is trading account, profit and loss account, and uh, balance sheet, also the cash flows, right? So this is about the thing which we are going to study now. Right, now let us go to topic 2. Here we go. Yes, so now recording methods: single entry system and double entry system. Though this image is, it is getting clearer now. Yeah. So let us start from what is accounting. We all know what is accounting, but let us go through this. Let me just hold on for a sec. Yeah, so accounting is an art of recording, classifying, and summarizing. We all know this, right? So it is art of recording, classifying, summarizing in a significant manner in terms of money, transactions, and events which are in part at least of a financial character, right? And interpreting the results thereof. We have been reading this AICPA definition from our childhood. I don't think anyone needs any explanation on this. So, accounting is an art of recording, classifying, and summarizing the in significant manner and in terms of money, the transactions and events which are in part of, in part at least, of a financial character, and interpreting the results thereof. From this definition, we can discern the following functions of accounting. First is recording the business transactions expressed in terms of money, then classifying those transactions into different heads of accounts, summarization of those classified accounts, so recording, classifying, and summarizing, and then interpretation of results thereof. So it consists of 4 things: recording the transactions, classifying the transactions, summarizing the transactions, and interpretation of the results thereof. Now, there are two kinds of recording methods. We have already gone through this. It is single entry system and double entry system. In single entry system, only one aspect of transaction is recorded. This is not scientific method. Only small businesses or individual professionals may follow the system of bookkeeping. So, why? Because every transaction has 2 aspects according to double entry system. And in single entry system, you just record one aspect of the transaction. So it is unscientific, not really reliable system of accounting. Now, double entry system is are consists of dual aspect of transactions are recorded. So it is more scientific. One aspect of transactions is called debit, and the other is called credit. This is a scientific method. As such, it is most prevalent method used worldwide. One of the benefits of the double entry accounting system is the idea for each monetary transaction. Both the source of the fund and the use of the fund are recorded. That is to say, for every asset, that is an item a company owns, there is a corresponding liability and or capital account for how the asset was acquired. So, in double entry accounting system, it is more scientific method. It notes the two aspects of any transaction, the sources of funds and the uses of funds. According to this method, every asset has a corresponding liability or capital account attached to it. So, for example, if ABC Limited purchases a computer for rupees 15,000, the transaction has two aspects. First is it is purchasing an asset computer of $15,000. Then that will be recorded in fixed assets. Plus, the cash is gone out of this. So, cash is to be credited. So, here it works like fixed asset is debited 15,000 and cash is credited to 50,000. We already know this how it works. Now, here fixed assets is debited and cash in hand is credited. We can also understand the company's business activities on the profit and loss statement, revenue or sales capture, monetary inflow to the company, and expenses capture outflow. So, let us understand what are the rules of debit and credit. This is modern accounting which we are going to study. It is not the three golden rules. So here debit and credit. So rule one says the asset account and expense account, if they are debited, it means whenever they increase they are debited, whenever they decrease it is credited. Similarly, the other way around, like if you look into liability, equity accounts, and revenue accounts, whenever they increase, they are credited, and whenever they decrease, they are debited. Right. So, because why? Because these are actually uses of funds, and these are sources of funds. So, sources of funds, whenever they increase, they are credited. Whenever they decrease, they are debited. And uses of funds, whenever they increase, they are debited, and whenever they decrease, they are credited. So now, business transactions. So, books of accounts, the book in which the business transactions are recorded or called as the books of account. These books may be either a physical form, such as the hardbound books, or on computer form. The books of accounts are classified as follows: so, journal, ledger, trial balance, and final accounts. So we all know about what is journal. I'll just go through this. I need not explain it. This is a book of primary entries. In this book, the business transactions are entered in order of the transaction date, but the journal will not provide a summary of specific accounts. Under their heading, yeah, under their heading, at any point in time, as such transaction is entered in the order of their occurrence. From the journal entries, it is possible to ascertain the cash balance at a specific date. For example, this. But because businesses generally have large number of entries, it would be tedious to arrive at this figure at any given time. To overcome this, these entries are posted in the ledger to summarize them. So, from include individual transactions, and these individual transactions are posted in ledger. So, this is a book of secondary entry. So, this is secondary entry. This is primary entry. The business transactions entered in the journal will be carried over to the ledger under the heads of each account, such as cash, purchase, freight, sales, and so on. This process is called as posting. The ledger provides the summarized position of an accounting for a given point of time. This will be helpful to ascertain the current position of all the heads of the accounts in a summary form. So this is a journal we have, and this is ledger we have, right? So journal entries and ledger posting. We have already done this. We have done this in Actually, we have done this in our fundamentals of accounting in semester one. Now, trial balance. A business makes a larger number of entries in its books on the daily basis. It is therefore possible that errors may creep in while making entries, either in the journal or when posting in the ledger. To check the arithmetical accuracy of the books of account, a statement is prepared. This statement is called as trial balance. The trial balance contains the closing balances of all the ledgers mentioned on the debit and credit side separately. The trial balance prepared on the basis of the above journal entries is presented as below. We've already gone through this. So what happens from journal, individual entries are posted into various ledgers. Then the balance of those ledgers are posted into trial balance to just make sure that there is mathematical accuracy. Then we have final accounts. Once the trial balance is tallied, the next step is the preparation of final accounts. In the past, final accounts were prepared at the end of the year, which is why they are termed so. So, final accounts comprise the following statements. Final accounts will be discussed in detail in the forthcoming lessons. So, what are the final accounts? Trading account, profit and loss account, and balance sheet. So, trading account is the statement of direct income, direct expenditure for a period. Profit and loss account is the statement of indirect income and indirect expenditure for a period, and balance sheet is the statement of assets and liabilities on date. So if you want to summarize this journey of business transaction, it starts with the business transactions to journal entries to ledger postings to trial balance and then making up the final accounts. So this is how we go through these transactions. Let's go to topic 3. Right, so observe the business of a nearby shopkeeper in your area and identify the shop's business transaction. Just you can make some journal entries related to this, make some good. We've already done a lot of practice on this. So buying a goods, selling of goods, payment of salaries, payment of taxes, payment of carriage, starting a new business with his money. We have already done all these transactions in our first semester. Taking a loan from the bank for further for business process, payment of bank loans, buying of furniture, receipt of sales incentives. Classify the above business transaction into 5 heads of account as explained, like capital, liabilities, assets, income, and expenditure. Find out the two components of each transaction. Find out whether the transaction leads to an increase in the account value or decrease in its value. Accordingly, work out which account is to be debited and which is to be credited. Record the journal entries, post them in ledger, and prepare a trial balance. So up till here, you have to do this. It's very easy. I'll just do this for you. It is starting a new business with his money. So cash is coming in. Cash is an asset. So that will be credited, and it is brought by the proprietor himself. So capital account will be credited because capital is a source of fund. So capital account will be credited and cash will be debited. So this is how you have to find out, and you have to find out this one, and you have to make this right. So I hope you'll be able to do this. If you have any doubt, just give me a buzz, right? So when you are buying of goods means you are making purchases, so purchase will be debited, and if you're making it out of the cash, then cash will be credited, or you may have creditors, so creditors may also be credited if you are buying goods on credit, right? So that is how it works. So this is topic 3. Let us go to topic 4 now. Okay, so here's a small case study. It is very easy for you. You can easily find it out. You are posted in a bank branch where you have been asked to handle the credit department. One of your clients provide you with some financial transactions which have not been compiled properly. The customer, being a small-time grocer, cannot employ a professional for keeping his books. He provides you with extract of his improperly written book. With this information, you will not be able to properly understand his business requirements. Knowledge gained in this lesson will help you to properly enter, post, and prepare trial balance from the following transactions and allow preparation of final account. So here there are some entries which are given, like some single entries. Now what you have to do is the steps which you have to follow is like find out the two components of each transaction. So like purchase good in cash. So one is purchase, one is cash. Identify whether the value of each component increases or decreases. So here you're purchasing, so your goods purchase will increase and cash will decrease. Identify whether the value of each component. Now apply the guidelines to determine whether transactions to be debited or credited. So cash is an asset. So if cash decreases, so it will be credited, and purchase is an expense, so purchase when increases it will be debited. Now record the journal entries as discussed above, post them to the ledger, prepare a trial balance. So I will leave this up to you. You can definitely go for doing this. The details of preparing a trial balance, this you already know. I don't need to go through this because you've already gone through this in semester one, right? But anyways, you can prepare the trial balance from this, right? Now, topic five, what are the things you have to keep in your mind? What are the implications of maintaining the books of account on a single entry system? Very bad. You are recording only one transaction, one aspect of transaction. You're following an unscientific rule, unscientific principle of accounting. And based on the information given, is it possible to understand the financial position of the business? Can the financial information provided be converted into the double entry system to enable the preparation of the ledger and the trial balance? And if debits and credits are not tallying, how will you tally the same? Will you enable the preparation of the final accounts, right? So ideally, it should the debits and credits should be same, but they should match. But if it doesn't match, then what are the methods? So you will check for errors where you have committed errors, and you will try to correct it. Then this last one is you're appearing for test, so that's good to go ahead. I would suggest just go ahead with this and complete your knowledge check, right? So thank you for your time. I hope it was quite useful, and I'll see you in the next class.